Hey everybody. Okay, I hope I have the sound fixed this time. So we're gonna give this another go. I promised you guys that I would take you through like a little walkthrough, so to speak, of how I turned a $500 scalping account into $50,000 in about 4 months' time. So it was a really good run. We're still going. I'm still in two plays that I'm waiting on. And then I'll probably take a break, and I've already withdrawn a little bit of money into the bank account because that is a golden rule with trading. When you take profit, is to always pay yourself. So I think first it's important to take you guys through this little portfolio tracker that I made for the Elevate group. What I did was I put this in calendar form for a number of reasons. So now I can track my profits on a daily basis, and I can use this as an education piece for our members or whatever, to show them that you don't have to make money every single day. So here we are in April. So this is when I started. This was that last week in April. So obviously, on this Friday and Saturday, I didn't make, money those 2 days, which is fine. Because I know a lot of new traders are in such a rush to try to make any kind of money they can every second of the day, or as many times per day as possible. And that leads to over trading, which is going to lead to a lot of emotional mistakes and revenge trading. And it's really not good risk management. The other reason why I broke this down into calendar form is to also teach members to set a daily goal for themselves. So even if you have, in this case, we started with $500. So even if you have a small portfolio, set a daily goal for yourself. If it's $20 a day, that's fine. You make your $20, make your $30 a day, whatever your daily goal is, and then walk away. Okay. So I kind of set this up into formulas here. So the weekly profit you can see up here is just taking the sum of all of these rows right here. So now I can basically input any number. Let's say I made $456 that day, and I made $75 that day. And let's say I took a loss on the next day, made lost $235. It's doing the math for me, so I can accurately track my daily profits or daily losses, also my weekly profit and weekly losses, and the percent gained on my portfolio or my starting monthly balance. This starting balance is I copy over each month to start this tracker over on each month, so it tracks monthly goals as well. Okay, so in this case, I made, let's just say I made $296 this week, which is 58% of my starting balance. Okay, so it keeps a weekly running total of the profits, and then down here at the end, of course, it has a monthly total and my monthly gain for that whole month. Okay, so the current balance is just the running total of every dollar that I make or loss. It's just keeping a running total of what my actual portfolio value is. And then my year-to-date dollar gain, again, is just a running total of how much money I've made since the start. So, if I started with $508 and I made $679 this month, it's going to calculate it there. And also my year-to-date percentage gain. So I can keep track of, my progress over the length of this little challenge that we're doing here. And the purpose of this challenge, if anybody doesn't know yet or hasn't heard, is when coronavirus hit and locked everything down. A lot of people lost jobs. All the markets took a hit, and I lost $40,000 in March in 3 days. So I took a pretty nasty spill there too. And it created a lot of fear that, people are losing their jobs, they're losing their incomes, they don't have a lot of money, so money is going to be real tight for everybody to make ends meet. So that kind of inspired this challenge to okay, you know, people are hurting, people are losing money, they don't have a lot of money. Let's start this challenge with our group, and even with people with smaller portfolios, and let's walk them through trades step by step and help them make money by just basically following what I do, following my calls. Okay, so that's what got this whole thing started. Okay, so over here on the right side of this portfolio tracker is the trade tracker. So I just log each of my trades when I close them out. So in this case, you know, this is the altcoin that I would play. This was the pair that I would play, whether if it was against Bitcoin pair or the US dollar pair. The date that I closed it out, what entry and the exits. So if I bought at 194 Satoshi on this trade, for example, and closed at 204 sats. Now the delta, all the delta is just the difference between the entry and exit. So that was a 10 Satoshi trade. So all of this was kind of necessary as the formulas got you know, a little bit further over. You can see I made formulas that would auto track all of this and do the math for me. My leverage. If I use leverage, I would put whatever leverage I use here, and this was the spot movement within the coin itself. So for example, Matic at 194 and exit at 204, it was a 5% move, and of course I had 4x leverage on it. Why that is 21%, I don't know, so there must be like a decimal somewhere between that entry and exit, and it rounded up. Okay. And then the dollar gain, I would just, well, let me see here. The dollar gain, let me go to margin history. The margin history, of course, the dollar gain is just whatever that profit was that day. So one thing that I noticed that did happen when I was logging these is that one day, okay, so if I log this on the day that I close it, and I went ahead and put in that, okay, I got a $103 profit. As the Bitcoin price itself fluctuated, for some reason, it would kind of fluctuate what the closing price was. Whether like this, if I log this profit, for example, at $2,400 on the day that I closed it, and it's now showing $2,500. I haven't figured out why the exchange does that rather than just locks it in at the dollar amount that I actually closed the position. So I had to take that in consideration if I wasn't immediately available near my spreadsheet to log it as soon as I closed the trade, that I would take a screenshot on my phone if I was mobile, and that way I can log it more accurately when I was available again. So this... and the purpose of that, of course, was to make this spreadsheet and make my trades as legitimate and as accurate as I could, you know, for transparency purposes and whatnot. Okay, so this is how the spreadsheet started. Okay, so we closed that last week of April with $383 or 75% gain of the total portfolio. So then May rolled around. Okay, and again, the starting balance. So again, I just took the monthly balance from the previous month and copied it there, and then it just kept the running totals. Okay, so May, you can see these profits. I didn't make money every single day. I logged my losses and of course my profits, and it kept a weekly total, weekly running total, and then the monthly total. So May was a good month. We made 810% of that starting balance, of the monthly starting balance. So this was the carryover from April. So we did 800% in May. It was a good month. The portfolio grew, and as my portfolio grew, I was able to expand out more into more coins, so I wasn't being all exposed to one coin. That's also something that I encouraged our people to do, is to not go all in on one coin, even though, yeah, I did it at the beginning in April because it was only a $500 account. But as the account grew, as the portfolio grew, I expanded out into more coins. So it was a good month, and you see the running total there. So in 1 month, we did 1,700% there. Okay, and of course, the trades, not a bad month. It was a really good month. Didn't take very many losses. It's a really good winning month. Oops. Okay, and one thing I also want to note here, guys, is let's look at like Quark Chain, for example. Okay, so let's note here what the entries and exits were. So entry was 37 Satoshi and the exit was 43 Satoshi. So it was a 16% spot move. And yeah, we had 4x leverage on it, which gave us 65% profit. So when we were looking at this, at our profit, it's like, wow, this is great profit, 65%. Let's log it in. Let's close out our profit, even though it was only a 16% move. So if we went to, let's go look, so let's look at the chart here. So what let's see, what day was this? Okay, so Quark Chain, we played Quark Chain at the end of May, so May 24th. So it was this big pump right here. Okay, and we sold early. So let's go ahead and plot down where we bought and where we sold. So we bought at 37 and we sold at 43. So we basically sold the top of this wick, basically. What we did not calculate, of course, was, we were probably looking at lower time frames and expecting a pullback to maybe retest that 37 range, kind of like in the middle of this confluence, as it rejected up here off the tops of those wicks. So we were expecting, a little pullback to buy back in which case it didn't. So it was a missed opportunity. It was a really big play, and we left on the table another 80% move on the coin. So again, we had a 4x leverage on that. So if we had caught the rest of this and just kind of hung in there, we would have made an extra 320% profit. I mean, that would have been probably like another $2,000. Would have been a huge gain for that particular trade. So that's something else that, as a trader, especially if you guys are a new trader, that you'll have to take into consideration. You're not going to catch everything. You're not going to catch the bottom of every buy. You're obviously not going to sell the top of every trade. Nobody does it. No trader does it. So a lot of missed opportunities are going to happen. And look, we could have kept up with this and scalped it on the rest of these moves and still made some good profit. But we moved on, and that's just the way it is. Okay, so June. Okay, so May. Let's see. May, our current balance. So this was the ending balance for May, and we just copied it over into June. June was a pretty good month. Wasn't bad. 84% of this total portfolio for the entire month of June. Took a little hit there, a couple losses. There's another small loss, whatever. So it wasn't too terrible. It's kind of a slow month, but still overall a pretty decent win rate. So you can see some losses here and some losses there. It was a pretty decent month. It was okay. July was horrible. July, absolutely just horrible. So look what we did. Look what we did for the entire month. So we were up. We were up a pretty good bit. So I think before this hit, we were up like maybe $7,000 or so. So it was still running a pretty good month. And then that last week of July, Bitcoin got that nice big move from about 9,200 to start pushing up to $12,000. And it pushed a lot of altcoins down, and I got destroyed. So I took some pretty nasty hits. MTL absolutely murdered me, and gas murdered me. So one other strategy that I had here is, let's look at mana. Okay, so this was one of the strategies that I did for mana. So let's see, I think it was right here. So here we are at the end of July, right here on this wick. So this is where we picked up mana. Okay, because there was rumors, there was that news out that Mana was in collaboration with Samsung. So it was a good start to that wick there. And so that's the end of July. And so that's the end of July right there. Okay, so we first bought at 505, scalped it at 524. Okay, and then we had some earlier buys, or we bought some pullback. So we bought back cheaper and then sold again, and then we kind of scalped it in this low range right here. So all of this little range down here, we did some scalps on it. Okay, so what happened after this pump is we were kind of walking this up. So we bought here and we scalped it here, and then we reloaded that small dip, and then we scalped it again. So we were walking the trade up. But then, of course, that Bitcoin pump happened because, you know, this was a strong trend. It was good Samsung partnership, so it was good fundamentals. So it had the potential to pump and go up. But Bitcoin happened and absolutely wrecked the coin. So let's see. So we rebought that, and then we didn't close it again until August. So we rebought right here. So we scalped it pretty good as we were walking up. So we rebought at 524 and 528. Okay, so that's about where we rebought it as it was trending back up bull. And we had a 3x leverage on this one. So with a 3x leverage, that means our liquidation price is roughly between 25 and 30% drop. So I think it's 25 on the exchange that we're using. Okay, so that means our liquidation was down here somewhere. So you can obviously see we would have gotten wicked out. Now, I always advise stop losses. Especially to new traders, always advise stop losses. So that was one, I guess, screw up we could have done, because we could have had a stop loss set up here in this confluent zone, which we didn't, or I didn't anyways. Because of the Samsung partnership and all that wonderful stuff, you know, I was going to swing it. I'd already made up the decision, my strategy, that I was going to swing this coin. So obviously, when Bitcoin pumped and pushed altcoins down, I was getting really close to my liquidation. So I was confident in the trade. I was confident fundamentally that Mana was not going to make a new low. I mean, it just got all that hype, and I started looking into the fundamentals and what they were doing, and it was a really, really strong, powerful coin in the making. So what I did was I left money on the side. Okay, so I wasn't all in. I wasn't all exposed to altcoins. I closed out some of my other positions like MTL and gas. I bit the loss on those because I didn't see any fundamentals coming out for them. But I was confident in Mana, so I used some of that spare cash and I lowered my leverage. Okay, so I lowered my leverage from a liquidation down here and I was at 3x leverage, and I just lowered it to about 1x leverage. So essentially, Mana would have had to dump all the way down to the bottom, or I think it might be probably around 260 or something is what I lowered the liquidation to. So Mana would have had to come and make a new low in order to come and take me out. So if we looked at the macro chart, okay, so one thing that we noticed was a low, higher low, and a higher low. So Mana overall was respecting this macro level trend line, and it was happened to be right there on my original liquidation price. So I averaged in, I added more money to my position to lower the leverage, and I lowered it in a really safe, comfortable position far away from being liquidated. Now, the downside of that, of course, is, and it is a risky strategy, the downside of holding a heavy loss when your coin is facing liquidation and adding it to lower your margin, to lower your liquidation, is if this were to wick down there and then turn and pump, I would have lost even more money because of how much I was adding in to keep that play alive. So it was a risky play. I don't advise it, but I mean, it worked. So what happened on this play, for example, was I essentially got a bad re-entry. So I got a bad re-entry, and I essentially held this for 2 weeks. And I think I was in like $4,000 loss, maybe. I was in pretty heavy. So I was pretty heavy. I was sitting in heavy losses on Mana for 2 weeks. But I was, again, confident fundamentally that you don't want to sleep on a Samsung partnership. So now, yes, I could have added more. I could have made another position, added another long position down here, but I didn't because I'm not really one to go knife catching. So instead, my strategy around this particular trade, as the price recovered, okay, and as it started getting back to my entry, is the money that I had added into the position to lower my margin, I would take back out. So if I had added another $1,000 to keep the play alive as the price recovered, I can take that $1,000 back out and re-put my position at my original 3x leverage. Okay, so and it worked out, and I've done this before several times with Wan Chain last year. I did the same thing. I lowered my margin below all-time lows to avoid liquidation, and then I held and lost for a while, and then Wan Chain turned and pumped like 140%. So not only did I ended up saving that position from being liquidated and saving my money, I actually turned that loss into a pretty significant profit. So again, it's a risky thing to do. I don't highly advise it, but we can see obviously that how much that worked out. So even from my entry, Mana pumped 114%. So it worked out. It was a good strategy. It was a good play, and again, that's because I was highly confident in the fundamentals behind Mana. But again, it is a really risky trade, or a really risky strategy. Okay, so we did July. Yeah, July was horrible. Then August, the first week of August, my wife's grandmother died this day, and we closed all my positions out on that Sunday, and then I took the half that week off to spend time with her while she was mourning. And then something happened, I don't know, but we just went on a monster tear. Finished the week off with $8,200 profit, and then absolutely killed it the next 2 weeks of this month, making about $30,000 within those next 2 weeks or something close. So we're sitting at this month alone, $37,000 in profit, or 234% of my starting balance. So again, if we went back to July, we closed July with $16,000, and even though it was a bad month, I took an overall loss for the month and took some hits. My overall portfolio was still up 3,000% or 30x. Okay, so I transferred the starting balance over, and now we're just running totals. Okay, so current portfolio balance is $53,000, and I just closed Atom for a scalp the other day, which kind of put us over that 10,000% rate of return mark. Okay, so that's where we're at. So again, the same thing that I did with Mana, we did with ICX. So ICX was a phenomenal play. So I think we first called this right around here, around 3,800. Okay, in a nice solid uptrend. So, and then the important thing to note here that we noted on Icon. Okay, so this is how we approached this strategy. Okay, so from February up until August, ICX did not make a new low. It built a nice new base. It held a great support. If we were to match this bottomed out cluster here, and let's just draw a line over there, we can see that we match the confluence zone over here and also the top of that wick. So it essentially flipped a support here and did not make a new low. So it didn't break that support and essentially killed the structure. So it was a great structure. It was a really easy structure to read. And again, you also could have drawn, a trend line or something, higher lows as the price went up. And of course, coupled with a bullish MACD. So our MACD crossed up bull here as the trend was moving up. As the price was moving up, our trend was moving up on the MACD too. So that was also a good signal. So we didn't catch the bottom here, obviously. We kind of caught it right here at 3,800 Satoshi. And there we are right there. So there was one entry. And then we scalped it at 4,400. So let's go to a lower time frame. Let's start cleaning some of this up. Okay, so let's go to 4,400. Well, that's essentially the top. So we had to identify where our resistance zone was. Okay, so this was the previous high. So we really couldn't consider upper targets unless this high broke. As we can see, it tested this resistance and rejected to come back to rebuild up for another support. So it was a great resistance zone. And that's why I noted on Twitter, if you guys remember, that FOMO would begin at the break of 4,800 Satoshi. Because if we look at this structure, we see this rejection wick and this rejection wick. These rejections, and of course this one now, 4,800 clears this whole resistance zone right here. So that's why I noted that when you clear this resistance zone at 4,800 Satoshi, the FOMO begins. And it did bigly. So even from 4,800, that's close enough. Even from 4,800 was about a 43% pop. Okay. So what we did, how we approached ICX was, of course, as I showed you, I looked at the structure. The structure was great. Our macro levels, the MACD was trending bullish. Had a good uptrend, good fundamentals coming out. So it was a solid play to hop into. So we bought down here. We scalped it and sold up here. And then we turned around and rebought again. So another scalp from 4,100 and scalped it up again to the top of that resistance. And here are my swing bags that I had for ICX. So I had multiple bags. I had swing bags and I had a scalp bag, but ended up selling them all up here in this resistance zone. Okay, and then reloaded. Okay, and then we reloaded. So I was doing a live stream because, as I mentioned earlier on another coin, we walked up other coins. So we bought, we scalped, and then rebought the dip, and then scalped it again, and we were walking it up, scalping it as it went up. So let me remove this and clean this up. So I was doing a live stream in the middle of this, and I believe it was this candle here. So we had already sold the tops of these wicks here, and we were looking for that pullback. But in the middle of that live stream, this candle had started to pump, or maybe it was this candle, I don't know. One of these candles had started to pump, and it looked like it was going to break out because it looked like a solid buyback candle. So we ended up buying again at the top, so the resistance didn't break. And you can see that there, we bought right there just at 4,500, 4,600 or so. Okay, and it was right here on this wick. So we had bought down here, sold down here. We had already noted that 4,100 was the rebuy, but we missed it. I don't remember why. I was probably sleeping. And ended up FOMOing on a false breakout, and we entered late. So like Mana, if we had entered here, our liquidation was, let's just say, I think it was around 25%. We'll just plot that there. So it was all the way down here. Okay, so that is a little bit more reasonable if there was a mass flash crash or something to consider. So it started dropping and dropping, and it actually came back and tested the support of our original entry at 3,800. And this was the flip zone that I also noted on Twitter for ICX to flip. Because if you guys remember from the chart, I had, you know, a push and then the pullback and then moon. So the chart actually had played out absolutely 100% perfectly as called. I just got sucked into a big green candle that looked like it was going to break, and we just got another bad entry. Okay, so no big deal. So again, you can see we sold in profit, but we were holding this coin in a loss, and since I was a little bit heavier, I think this was about $5,000 or $6,000 in losses that I was holding here. So again, I had money on the side in case my liquidation was getting close, so I can add to my margin, lower my liquidation, and drop it somewhere below this support. Because if ICX had fallen below this support right here, the coin was, well, it was practically going to go. It might as well have broken the entire structure, because you know, we have a low, a higher low, higher, slightly higher low, roughly about the same. So we needed to see another higher low somewhere there in order to keep the structure alive, and it did. Okay, so same thing. We didn't average down. There was no need to on that one. It held the support fine. We just had to be patient and wait for it to pop. And rather than sitting in a loss, turned around and scalped it for another $5,000 in profit. And we sold at 5,600. So we sold at a next resistance, 5,200. Let's just go somewhere in the middle there. Okay, so we sold again here, and again we got suckered into a low time frame pullback right here. So there was a lot of rejections. Our MACD was showing signs that it was going to pull back. So here is the screwed up part. We had noted, or I had noted, in the copy trade channels where you know, our group can follow my calls a little bit more closely, what I plan on buying and selling. So this is where we sold that 5,200. So again, we are scalping on low time frames within a higher time frame trend. So the trend was bull. So we didn't really worry too much about bad entries because we knew the price was going to recover. So again, that was another pretty confident play that I didn't have to worry too much about a bad entry. So again, we sold that that next pop up here, and we had noted right here the pullback buy was between 4,600 and 4,700, somewhere in that zone there. Okay, so that was 46. Let's just say 4,600. It was somewhere in there, and 4,700. Okay, so again, this is where we sold that last bounce right here, and we had noted, so this is a 15-minute chart, and then we had noted this was the buyback zone. Okay, so here's that wick that I was pointing to in the copy trade. There's a nasty wick rejection right there, and that's what prompted me to sell and scalp that. So the buy zone was dead on, not once, but twice. Now, I am not one to knife catch. So if I'm looking at a pullback and it just so much as even wicks down into that zone and then bounces, that's hindsight. You're never really going to know that's going to happen. What I look for on a pullback, if it's a good pullback, decent one, I look for a consolidation period to rebuild a new base and regather in, some buyers' interest or whatever, and then buy. So obviously this didn't happen in my case. So this was another, 18% pump. We had 3% leverage on these, so you can see what happens with a 15% pump. It was $2,500 profit. So if I had knife caught that and sold that next wick right up there somewhere, that's about another 15%. That was another $5,000 missed. Okay, so then again, I can eye these low time frames and watch the retest of that support. As I can see, the trend in the MACD and both the RSI were trending bearish as price was trending up. So it was a bearish divergence. If I can get my stuff to work here. Okay, so my price was making higher highs, my MACD was making lower highs, my RSI was making lower highs. So it was another good place that we could have spotted a sale right off of that wick rejection, another $5,000 profit, and then once again rebuy that support, because a support is a support until broken. And it's also a good flip zone. Okay. So this rejection and this rejection was holding the rest of this structure down. So it's a resistance until proven otherwise, until broken, and then once a resistance is broken, it now flips as support. And that's what happened. Now, the only way that this support would be invalidated is if it closed below it and continued on a downtrend. That would invalidate that as a support. But since, again, this is on low time frames, but our macro levels, our 3-day was all trending bull. This was the perfect call right here to rebuy. And I think I was sleeping when this happened. So I missed, unfortunately, I missed the rest of this 50% pump. So if I would have made $5,000 off just a 15% pump, a 50% pump, I don't even want to talk about how much missed profit was on the table. So again, that happens. That's the reality of trading. It's going to happen. Still made good profit on ICX. Probably I think $12,000 to $15,000 scalping it. So it was still a great trade. Really excited for the project to see the fundamentals that they had coming out. So it was just a missed opportunity. Now, that doesn't mean that the trade is dead, because now I can zoom out to some mid time frames, and then once again, I might get another chance to retest that support. Because again, this is a support until broken. My MACD here is trending bear, my RSI is trending bear, and it's kind of just slowly grinding down. So now I may see that pull back into that consolidation period and catch a bounce. So I may get to reload in this support zone and scalp it again. So I'm not ruling this out. So yes, I missed some really good profits here, but I'll get another chance. And it may not be the full pump again. It may not reach the highs. It could just be a relief bounce. Another 20% there with 3x leverage is still 60% profit. So that was one strategy that I used to approach Icon, and it worked well. It was a great play. We did the same with BAT and Algo. Algo was a great trade, and you can see here I had 3 losses on Algo from some bad entries, and then I just kind of psyched myself out. Oh, I had 5 losses on Algo. There's 2 more up here. So I kind of psyched myself out of the trade rather than just holding, being patient and holding a little bit longer. So these were low time frame scalps, bad entries, but I was still scalping them also for profit in other trades. So as my portfolio grew, I was able to risk more and have larger positions into plays. At the same time, always make sure that you keep money on the side in case you need to average down, and you don't want to be fully exposed. So now, let's see. So now what we're looking at are the last 2 big plays that we're looking at. So I'm looking at Ion or Aeon, or however you guys pronounce it. And I'm approaching it with the same strategy as Icon, because this is almost an identical structure. So let me start this over. This is almost an identical structure to ICX. Okay, so the first thing that we spotted was the accumulation pattern. Okay, here are all-time lows right here. And this was also an accumulation pattern down here at the bottom. And we are now flipping that bottom. So we made a low accumulation and we made a higher low accumulation. So it was a good setup, good structure, nearly identical. And we also got a low, higher low. And again, our MACD is also trending bullish as well with higher lows. And we have a good cross up on the MACD. I'm a big MACD player, indicator trader, in case you guys haven't noticed. It's one of my favorites to gauge trends, even on low time frames for entries and exits. Okay, so the histogram, the MACD lines are hugging the histogram, so that's an indication that there's still a lot of room left to run. Price action here holding above that green line, which is our 7-day moving average, so everything looks pretty bull right there. So now it's just a matter of identifying where our resistance is. So this is our break point right here, somewhere just under 1400 Satoshi. So like Icon, let me go back to Icon. And let me zoom out to macro levels. Oops. Okay, so like Icon, when I said that, or noted that FOMO begins at 4,800. So let's just put that right there, a little above, that's okay. At 4,800 Satoshi. So that would be clearing the resistance. Okay, now if you look at Icon, there's not much above the resistance there. Once it breaks this zone, and again, you can extend that out. Okay, so 4,800 would practically be clearing the resistance zones here, and then it's just a matter of plotting down the top of the next resistance zone, somewhere up here at the tops of those candles there. Okay, so again, almost identical setup with ION. Okay, so accumulation pattern, identifying where the breakout point is. So this is why I noted that FOMO begins at the break of 1400, because it would be clearing these resistance wicks, and then it's just a matter of plotting down our resistances. So we'll probably retest the high. We had to maybe retest the high as a resistance. So I can approach this the same as ION. I can scalp up here and then rebuy the pullback and then hold it for the next push up. Now, one thing that you have to notice here is once this zone breaks, there's not a lot of resistance. So this whole area is practically a resistance gap because there's no historical confluence up here. Okay, the next major confluence area is up here, so it may reach to the bottom of that zone on that wick, or it may pump to the high off of these wicks, matching those wicks and those wicks at the bottom there. So around 3,700 Satoshi. That's of course hindsight. So I'll be flopping down to lower time frames to see, maybe mid time frames to see where it's going to reject, because it could have a pullback even right there at 2,500. So you have to plot down where your resistance zones are, and then we can jump down to low time frames and then watch price action as it goes up, and then if it starts to create a distribution pattern, and then it's going to come back, so you can sell up in that distribution pattern and then rebuy the support on the dip. So essentially, if anybody hasn't figured it out yet, essentially what I'm doing is Elliott wave trading without counting waves. I'm using support and resistance zones, and I'm using the MACD to actually guide where there's going to be a rejection and where there's going to be a pullback. Elliott wave is based on the same principles. Everything is built around support resistance zones. It's the golden rule, golden fundamentals to trading. So this is not that difficult. And so that's how I'm going to approach ION. So once again, I have scalp bags and I have swing trade bags. So I'll likely sell my scalp bags up here at the top of this resistance and then reload my scalp bags on that pullback. or just take the profit and move those into another coin, because I'll still have my swing bags that I plan to put in for a long haul. Now, the other thing that I'm pretty confident, or why I'm pretty confident, is on ION. So let's go to Twitter and let's search the hashtag ION. And let's go to the latest. Somewhere was there was a lot of chatter from the ION group. Hey, there's me. There was a lot of chatter from the ION group. So let's just go to about this. Well, there's this World Economic Forum. And then this open application network, and there was something else that they are associated with that's built on the ION network that was alluding to DeFi and CeFi, so both decentralized finance and centralized finance. So it was something big, some big fundamentals coming out for ION that was generating a lot of hype. So that's another reason why I'm pretty confident in the chart structure. The structure is there. Now it's getting the fundamentals, the news, so to speak, to cause a catalyst in the push. So I'm fully confident in ION. So that's just another trade that I'm in, and that's how I'm going to approach it. So that's kind of what I've been doing, working this portfolio up. Okay, and I guess for transparency, I mean, you guys are seeing my profits here. So these are the trades that I've closed. I got O&T also open. So O&T and ION are my two bags right now. So O&T is not doing me so well right now. Some good profits in EOS even. And across the board. And again, some of these may fluctuate as Bitcoin price fluctuates. That may not match 100% with the dollar gain at the time that I logged it. I don't know why it does that. I haven't figured it out, but I did note that to try to keep this as accurate as possible. So see, there's Algo with a solid $3,600 trade. And then there's those two losses on Algo on those bad scalps that I showed you. So again, let's look here. So 641 loss on Algo. Let's see, it might be that one. That one's showing 631. And then here's $816, but at the time I closed the trade, it was $805 loss. So it fluctuates, a few dollars. I haven't quite figured that out, but whatever. It is what it is. So Atom was the latest trade that we closed. I had a smaller bag in it, so it was about $3,000 profit, but it still ended up pushing a lot above where I sold, because again, I was taking that same approach. So if we went to Atom, let's see, where did I sell? I sold at 61.53. Okay, somewhere right there. We'll call it just somewhere right in here. And again, I was looking at a low time frame rejection that kind of phased me out, and I missed the rest of that pump. So again, that's another 20%. So I left about another, I don't know, $4,000, $5,000 of profit on the table. So as a new trader, that is something that you guys have to accept, that you're not going to buy the bottoms of everything. You're not going to sell the tops of everything. You're going to miss plays, because OMG, that monster pump from OMG, I didn't catch a single bit of this. I didn't even really know it happened, because I was so focused on watching my own trades. This thing just went on a monstrous tear, 500% run in about 2 weeks or so, and I didn't catch a single bit of it. Well, I wasn't watching it. So you're not going to catch everything. So you just have to find good chart structures, focus on those and good fundamentals. See, here's ION now breaking 1300. Once it gets above 1400, it's golden. And even to that first target for the scalp bags, that's 40%. I have 3x leverage on it, so that it would be 120 something percent profit. And I am fully happy with that. So I mean, yeah, those are just kind of my strategies. It's really not difficult. All I'm doing is I'm identifying good structures. I'm looking at high time frame trends for entries, and I'm basically just plotting down where some targets, resistance targets may be. 2700 might be a good target for a swing off of that wick, cutting across those two wicks. Or if it pulls an OMG type pump, because Ion is only $45 million or $50 million market cap, lot of room to run. So if it pulled an OMG type pump, it can pump all the way up here to this confluence zone, somewhere around 4,000 and 4,500 Satoshi. But I'm playing it both swing bags and scalp bags. That's my strategy. Really nothing to it. Bat was another one. I think Bat. Yeah, Bat. So we noted Bat that this was our target zone with 31% profit from our call, and we expected some chop up here in this zone to come back for a pullback. And that's quite literally exactly what it's doing. So now we reached a resistance zone, so now we want to look for a support zone. So just like I showed you guys with ICX, I'm going to give you guys a little trick right here too. See this wick right here, this nasty wick that got bought up? That's kind of setting a set point of where the pullback is going to be. Now, if you'll notice where this wick is, cutting across those tops of those wicks and cutting across most of the tops of these candles right here, that set point is roughly about where you can expect that pullback to go. So it's a little trick that I've noticed that I'll see market makers do, because that is definitely market makers trying to buy that back up. That's not retail. Retail panics and would sell that dip. They'd see a big red candle and they'd sell it. So this is a market maker essentially creating a set point for a support. So what I would watch for, and what I am watching for, is how this is going to chop down here and build a new base and then catch the next leg up. Or again, if you're an Elliott wave person or whatever, then this would be your first impulse and then your pullback and then so forth, or whatever. So essentially, that's what I'm doing. Elliott waves without counting waves. I'm using MACD support and resistance zones. It's a lot more accurate, and it works well. So I hope this clears up some things, or maybe even helps some of you guys to see these charts, see some things in charts a little bit better. ONT is another one that I'm watching. So I've already laid out where my resistance zones are. Okay, so once ONT, for example, gets above 850 Satoshi, because you see the rejection, you see your rejection, here's another one, and this little confluence here, and a rejection here. So that's what's holding the whole structure of ONT down. So once ONT breaks that, then it's off to the races. So then the next resistance zone, and then we swap down to low time frames to watch for a pullback to rebuy, and then we just ride it on up. So again, like the other coins, look at this monster gap right here. There is nothing here. So if ONT were to break 1050, that's a lot of room to pump. That's got a lot of room. But that's hindsight, of course. So the best we can do is we can just simply plot down where our resistance zones are and watch price action, how they react at each zone. So do that if you're a new trader. Just identify or work on identifying where support and resistance zones are, and on high time frames, and then go down to some low time frames or something and identify what the price action is doing at each zone. So now we got a trend line here making higher lows, for example. So this is ONT. So now we can maybe expect ONT to make another higher low and then catch that pump or something. It may not go that low, but this is another swing trade, swing play that I'm in, because it's got good MACD, bullish MACD, and a pretty decent 3-day uptrend. And so that's how I'm approaching ONT also. So these are my last 2 trades that I'm in, and I'm probably going to take a little break from actually trading. I'll still chart for our group, but it's been a good run so far. We're now at 10,400% profits, $37,000 profit this month alone, when we started the month with $16,000 profit. And so now as my portfolio grows, so will my position sizes, so I'm able to risk a little bit more without going all in. And then I can spread out some more coins, and then and of course my positions sizes will grow, which means my profits will grow. So now we're kind of up here in the $1,800 to $2,500 profit range on these scalps. As the portfolio grows, that profit may start getting into $3,000 to $5,000 profit per trade. Then we'll work up to $6,000 to $7,000 profit per trade, and so forth. So I guess the moral of the story is pace yourself, set a goal, whether if it's a daily goal of $10 a day, $20 a day, whatever, $100 a month, or $10,000 a month. Set a goal for yourself, and then if you reach a daily goal, walk away so you're not over trading. Don't go all in, of course, that's kind of a given. Always leave some money on the side just in case you need to average down. And of course, you can see there's gaps in the days where we weren't making money at all. So you don't have to try to force trades, and you don't have to try to make money every single day, even though August has been a phenomenal month so far for scalping altcoins. Let me save that. Okay, so I hope this helps some of you guys. I hope this maybe even inspired some of you guys to follow along or find your own strategy and see what works for you. So try it out, I guess. I might even make this this tracker available free to the public for you guys if you guys want it. I'll post it on Twitter or something for everybody if they want to use it, so you can track your own trades, or if you have your own tracker that you've made or got off the internet, that's fine too. So I encourage you to keep a journal, so you can go back and look at some of these trades. Like look at my July was horrible. So right here in the center, we pretty decent month there, some pretty good profits, and then we got slaughtered. So we can go back and reflect on our losses and ask ourselves what went wrong. Why didn't we close the trade sooner, or what obviously didn't have a stop loss and got wrecked, which I'm really sad about these trades now because they all end up bouncing back to my original entries. So if I had held and just averaged down, I probably wouldn't have taken those losses, but I mean, again, that's hindsight. Okay, so I hope you guys learned something. If you did, great. Hit the like button, hit the subscribe button. Be sure, if you're not already, to follow me on Twitter, and also if you would check out follow our Elevate Trading Twitter as well, because we post a lot of updates and giveaways and stuff on there as well. So this is a free alpha right here for you guys. If you guys are watching, this is a free alpha. I'm quite confident in Ion, so this is a free trade for you guys to hop in and follow. ONT can have some potential if it gets its butt over 850 Satoshi. And I know some of you guys were also following in Atom and Algo and Icon and stuff. So really great that you guys were following along there. So yeah, hit the like button, hit the subscribe button. If you guys have any questions, feel free to reach out to me. DMs are always open. I'll try my best to get to everybody. And yeah, that's about it, guys. Thank you.